Hi, it's Warren Whitlock. Emerging Technologies is the name of this podcast, and we're going to talk about the future, how it's going to be better, and what you can do to get along. Today's topic, Bitcoin is near its all-time high of trading. Is that good? Is that bad? Is it going to go up more? Is it going to crash? Is it just a hoax? Is it going to go away? What are you supposed to do about it? And I've been studying that a bit. Like I've had some Bitcoin for at least a dozen years now. It's an incredible project if you understand what it's all about. Most of the time, people talk about cryptocurrency and think, what is that? Is it some toy? Is it something you use on the dark web to buy things? Is it criminal? Is it even allowed by the government? All those kind of things. And I know I talked to an awful lot of people about it. In fact, we've just concluded putting it on a conference for big investors, and they talk about what they're doing. In that conference, you won't find anybody saying, is Bitcoin a good idea? They all know they've used it, they've used other cryptocurrencies, and they've used the underlying technology, which is much bigger than trading money. But the money business, finance, is much bigger than just whether or not the token has any value. And while we're so far beyond, there's things that just don't involve that. Using this technology to be able to record things in a better way, eliminate errors in bookkeeping, have contracts for very complex financial things going on, cut the rates of moving money around. The world of blockchain has just been growing exponentially for many years, and we're just getting started. So let's answer the short question. Yes, it's always a good time to own something that is fundamental to an industry and going to grow and be abundant in the future. And no, you didn't hear it from me because I'm not a financial advisor. I don't play one on TV. I don't give out any kind of financial advice as telling you what you should do with your money. That's up to you and people you trust. I would hope you trust me to give you a straight shooting truth about what I can. However, I cannot advise you on your particular things. It's actually against the law here in the US for me to tell you to invest in anything, and I wouldn't dare try. It's actually a nice position to be in the fact that I don't have to. I don't need to worry about you're going to lose money because you listen to me because I've told you and will tell you every chance I get. Do not listen to me if you want to know exactly what to do with your portfolio. But I can tell you some stuff that I've learned and hopefully point you in the right direction of who to trust, who not to trust, and some principles that are going to help. One of the things is money is all about exchanging some form of exchange that is not the the item itself. Barter would be me trading you my cow for your pig. So I don't know if that's an equal trade, but maybe 10 chickens for a cow. I should talk about something I know about, but definitely you've cooked a meal and I've fixed your doorknob and we're equal. And so that all gets thrown out in families. In my house, something needs fixed, I fix. I have to do it. I love my family. They need it. If I manage to get a meal, it's great. It's food I bought and somebody prepared. Wonderful. But once you get outside of a family and those kind of ties, it becomes a little bit harder to collect. I'm always helping my neighbor when he needs this or that. I give him a ride every day in my car. Maybe I should ask him to put in some gasoline or charge the car, depending on what kind of car you have. And we have to have exchanges to get along as people. What happens when you don't is sooner or later it becomes things like resentment and worrying about whether you did enough for the other person or did too much for the other person. I'm here to tell you, by the way, the answer to that: always give more. The more you give, the more you're going to get. That's called karma. I can give you recommendations on karma because there's no finance or cash involved. But we got more sophisticated in that thousands of years ago, and the debts became a who has a credit and who has a debit. Even before there was any kind of formal accounting of this, it was okay, great. Let me keep track of how many times you've come in and how many times you've used my service, and we'll also keep track of how many times I've given you some of my service or product in return. And when that got written down, that became what ultimately was finance. All the things like from shells to stones to pieces of metal with the king's picture on them, all all came out of that. And today, the idea that the credit is important is in my life. It was I was at a meal last night, and there were 9 people there. The total bill was enough that no one sitting at the table life would change much if they'd have picked up the tab for everything, but they didn't. They were calculating out how much each meal was worth, or no, let's just total it and divide it. And then there was one guy who ordered nothing, so he had to be left off. Actually, 15, 20 minutes has gone by discussing how to reconcile this, and somebody was didn't have quite enough cash, and so I said, fine, here, let me help you. And then they gave me back change, and then I gave that to another person. uh, at the end of the day, I paid some money, and about double what my meal was, and still felt like maybe he wanted me to pay more. So we need some form of currency. So let's get into Bitcoin. Was created so that you don't have to trust some central government. That's a part I've skipped over, how it got to be that the government got all the power and because they have all the guns, and whether or not there should be the government controlling what you do in commerce with other people. That's a whole nother layer of the discussion we'll do on another day. But we got to Bitcoin. Satoshi Nakamoto wrote a white paper in 2000 Halloween 1031, wrote that, and then they followed the rules of what they'd set out. It's only 9 pages long. I encourage you to read it, and there's parts you can skip over that are technical, and so it really makes like something you can read in just minutes and understand what they were going at. They wanted to be able to trust whatever happened so that there would be a form of money that didn't get inflated. And a bit about inflation: if the government prints money and puts it into circulation, that means there's more money and everything else remaining the same. That means the prices are going to go up because there's going to be more dollars or pesos or whatever you have going for rocks and shells, and you'll be able to. And if you suddenly get more, for instance, when they use shells as money, someone goes to the other side of the island and finds a whole lot of shells that weren't there before. Suddenly, they're the richest guy in town. But as it starts to circulate, all prices go up because there's more people wanting the same things. In today's economics, a lot of effort is put into balancing that, make sure that the cost rising doesn't happen, and they can still print more money than there is gold or anything to back it. And so that's where we have monetary crisis is too big of a word. Monetary normal is to have things fluctuate that we don't know anything about. If the government suddenly prints twice as much money, the value of the money you've been saving, whether it's under your mattress in a bank or in money you're owed, all become things that are worth less. And you don't see it because the terms are, if you are owed $100 and they inflate the money supply, somebody will pay you $100, but it'll be worth half as much as when you first made the contract. That goes away with something like Bitcoin because there will only be 21 million coins created, and they're not coins, tokens. It's electronic, has to do with the math equation. Again, read the white paper. That's what happens. But just as they are producing more until 2140, and they produce half as many every 4 years, so that's deflation. It's not really deflation, it's deflationary in how it works, because deflation would be taking some out of supply. They don't reduce the supply, but they don't increase it near as fast as the number of people wanting to use it. At first they were producing maybe 100 every 10 minutes, and it's down to 3 every 10 minutes, and those are approximate numbers. And that's what happens. And then it becomes a cycle that this halving happens about every 46 months. And then there's going to be some changes. The volatility in Bitcoin is that it's relatively small as an asset compared to the rest of the world, but it's incredibly stable in following the trend that they set out to do. And the stability will increase over time. And so there is a risk. Some people decided to go out and buy 10,000 Bitcoin when they were 10 cents a piece. But I heard a story just yesterday, somebody that sold 5,000 Bitcoin for $5, and not $5 a piece, $5 total, making them worth a tenth of a cent. And the story was told about the guy selling it, and oh boy, what would that be worth if he kept it in? And Bitcoin currently in the $70,000 range. I like the other side of that transaction. Somebody decided to spend their $5 and get these Bitcoin. And if he's held on to them, then he has all those Bitcoin. Quite likely it's traded or something, but there's a lot of Bitcoin that's never traded. So how do I know? Do I buy it now? Do I buy it later? Do I just not bother with it? I'm not a fan of the just don't bother with it because it's going to change the world. Why not own a piece of that as it's happening? It seems like a good idea. And I'd still be acquiring Bitcoin. So that's what I think. But maybe at some point I want to sell some of it. There is a cycle. And if you're able to get a hold of the cycle and sell, we'll say within 20% of the top and buy it back within 20% of the bottom, you will make the maximum amount of money. And if you want to trade, that you're on the wrong podcast. I'm not going to trade. I'm going to teach a principle. If you buy a hold and you occasionally sell some and then buy some more back, the discipline is, can I sell it and then do something with the money and come back a year later and buy it at a different price? That's been difficult. But the cycles are there. It's a 4-year cycle, and it's going to happen. There's a spring, a summer, a fall, and a winter. In the winter is when all the innovation happens, when the price is down, when you're not sure when it's going to go up. Then it hits the spring, and you see some things going up. And then summer, which is currently, as I speak, what we're going into next. And that's going to be like price rising like you don't know. And then lots of things. And of course, lots of news reports about this is just a bubble and it's going to go away. And then there's going to be the fall. And what happens in the fall? Things fall. And then it starts again. But there's a bigger thing called a super cycle where as more and more people get interested, and it's now hundreds of millions that hold Bitcoin, when it gets to a certain point, you have a jump where it suddenly can go from 4, 5, 7% to 40, 50, 70% of the population interested in doing something with this. By the way, if you'd like to buy a Bitcoin, you don't have to buy a whole one. There is a Satoshi, which is one millionth of a Bitcoin, if I remember correctly. It's a very small part. And right now you could buy, if you have $1, you could buy multiple Satoshis. And if so, no matter how much you have, and a Satoshi and a Bitcoin, it's all Bitcoin. A Satoshi's just a way to talk about the decimal points. So, but you could go to a place where you buy Bitcoin and put in that I have $10 and I'd like to buy Bitcoin. It will give you a price based on today's price per Bitcoin and sell it to you. One of the limits on Bitcoin is that just doing that might have a higher percentage transaction fee. And that's also the beauty of the Bitcoin, because if you have $10 million and you're trying to buy Bitcoin, it's not going to be a substantially larger cost than if you're buying $1. That's, to be fair, the transactions are what you're paying for, not what's fair to as a percentage of the thing. But that can all be worked out. There's other things you can learn about how to make a small investment, but still, if you're able to buy $1 of something that's going to go up 3 times or 3,000 times before it's done, then a small fee to get it would not be there. I'm not really sure whether $1 even works out if the fee's under $1. Check on that. I'm not here to tell you exactly what to do, just the theory of all this. And beyond the cycle, the leading expert on cycles is my friend Michael Terpin. And Michael Terpin has just written a book. It's called The Bitcoin Supercycle. This is it. It's actually coming out in November of 24. And right now, I have an advanced copy. You can order it at your big booksellers. It is a fantastic tale of the history of what's happened with Bitcoin, what the naysayers said, when they said this event or that is going to crash everything, how they affected the short term price, but not the long term price. So if your job is to figure out a way to trade and you're really smart, you can buy and sell the same asset over and over again and get rich if you're the one in a million that do that and do it well. It's a competition where if you lose, you can lose everything because it gets into taking your dollar and borrowing $10 to go with it. And so if it goes down by $1, not only have you lost, but everything's completely gone and you may owe some money. Trading, again, not me. I'm not a financial advisor and I'm not a trader. There's a lot of discipline, it's a whole different career. But if you want to figure out where you might invest and hold it just for the long term, make it your retirement plan or make it your safety from if the government crashes, or if you live in a place where suddenly the value of your money goes down very quickly because of the government is printing a whole lot of money in your local currency, safe haven to be keeping that in Bitcoin. You need to move between countries. You can take your Bitcoin wallet with you, which is not a physical thing, it's a number. You could even memorize it, though I wouldn't recommend a 16 random digit number as something you'd want to try to rely on just your memory for. But you can have, it's pretty secure. It's really hard to beat. And so far, no one has been able to hack the actual blockchain that Bitcoin is on. All the other things you hear about, the meme coins and the NFTs and the company that's coming out, boy, if you know what you're doing and you can get involved with any of the companies and the people, that's a great thing. But if not, just go ahead to get the book, Bitcoin Supercycle. I highly recommend it and find out about the cycle that's going to beat them all. Now, Bitcoin is accepted, and that high growth factor tipping point that we talked about is going to be occurring. And it's a really good chance that some of the price goes up, maybe not quite as much, but becomes something that you can depend on, not losing every dollar you put into it. But again, I'm not financial advice. You go decide what you're going to do. I love Bitcoin. I'll always hold some, and I've invested in the industry and know a lot of very smart people, very honest people working with integrity to make this a better way for us to do transactions in the future. And so I think it's something worth looking at, but I can't tell you how much or whether or not in your situation to do it. Maybe you're in a situation where it'd be better to consider doing something else. That's all up to you and your financial advisors, not me. But with that caveat, as much as I love Bitcoin, I want you to do some research yourself. There are several that are good to understand that I've read and I know about, and I've talked to the people about the things, all the basic how to get started in Bitcoin. Of course, would be there. Coming to one of the events we put on, you can go to BitAngels, BitAngels, Angel dot network. Find out about it's an investor network. If you are a qualified investor, we want to have you in the network. If you want to know about it, go ahead and sign up, get the free things that we have. We do put on events, and ultimately we'll have some training for anybody. That's it. I'm Warren Whitlock. This has been Emerging Technologies.